All right, it's officially 10 o'clock, but I'll give it a couple more, a minute or two after 10 o'clock to officially get started. But to open up, what I just wanted to mention is that if you hear any screaming children, dogs barking in the background, please apologize. Every one of the presenters is doing their best to stay secluded and quiet. But as you all probably know, working from home or remote, it's not always that easy for you to find that quiet space. Things happen. So no video today from the speakers and the presenters, but in future, I think we're going to be switching to that, to that type of environment where we'll have the speakers, video shown as well to make it a little bit more personal as we go through these remote types of training sessions. All right, so what we'll do is we'll begin. So thank you all for attending and dialing in. I know we typically have our Central New Jersey compliance meetings in our office, and we usually get anywhere from 20 to 60, 65 people attending, depending on the topic, depending on the weather, depending on different circumstances. Today we have with this presentation shifting to fully remote. We have registered around 110 people, and right now we have on the line already about 80, 83, 84, and it keeps jumping up as we go. So thank you all for attending. And, I feel as if these compliance group meetings that we're having, if we can really master it and make it very effective, I think we'll have better reach as opposed to people coming down to our office from the city, from New York City, from Philadelphia, and from the surrounding areas. So thank you for joining. As I was talking a little bit with the few first attendees, this is the first time Mercadien is doing the CPE fully remote like this, leveraging Zoom. So I think we have it down. I think we have it organized in the right fashion and the right way. But if there's anything during the presentation that you liked or disliked, please include that in the evaluation when you're filling it out at the end so that we can learn from that and take those best practices back to our firm so that way we can make these types of experiences and training sessions that we do better in the future. Hopefully everybody is well and everybody's doing okay in this new environment that we're in, and that you're getting used to it and working it to the best of its ability. I think at Mercadien we really successfully went into the remote capabilities. We had our office went from 150 people, not everybody on site every day, but what it really wound up being is about 5 to 7 people in the office, and everybody else was remote. And we became very good at using Zoom and also internally Microsoft Teams to do all of our work. And a majority, if not all of our clients really, I don't want to say seamlessly because it was a little bumpy in the first few weeks for everybody, but pretty seamlessly, in my opinion, in such a short period of time, transitioned into the remote workspace. I know, obviously, being bankers on the call, we are a group that is in the essential workers. So some of you may not have had the opportunity to work remotely or work remotely for a long duration. But I could say all the presenters on the call, I don't think any of them have gone into the office maybe more than once or twice over the past, whatever we're at now, 10 weeks or so, since we went to a full shutdown. So again, I think we're doing okay here in this environment, and we want to try to make it as interactive as we can. Obviously, you're all on mute to make this a little bit, a better experience as opposed to people forgetting to mute their background. But one of the things we can do is, if you see there's a chat bar on the bottom, if you have any questions throughout that you want to ask the presenter, the other presenter who is not speaking, whether it be Joe or Christina, will make sure that they're reading the questions and they could interject with the question and try to get your answer. If it's something we can't answer off the cuff, we can jot that down and get back to you at a later point in time. So please feel free to use that chat on the bottom of your screen. And again, if you haven't used Zoom, if you hover your mouse over your screen, it should illuminate a bottom bar that has the ability to do questions and answers, as well as chat. So I shouldn't rephrase that. Don't do the chat, do the question and answers. So then that way we can see what's still open as questions, and then we can move them over to answered. I didn't know that feature was there until I just started talking. So hopefully the rest of my panelists and team know how to, answer and dismiss certain questions so that we can keep a good tally. For those of you who do not know me, I should have said this in the beginning. My name is Sal Zarilli. I'm a partner at Mercadien, and I lead our financial institutions group. We are, working as a firm in many different aspects as a full service CPA and consulting firm. But in the financial institution space, we have risk management services, which are inclusive of outsourced internal audit, regulatory compliance, Bank Secrecy Act are pretty much our big, service offerings. Most of you are in the BSA or audit world, and that's why you're on the line today. And, through that, what I've asked is one of my managers, Joe Galdo, and one of my supervising seniors, Christina Richardson, to lead the presentation and the talk. So what I'll do on that note is hand it over to Joe to go through a couple of opening slides.
Thank you, Sal. Good morning, everyone. Thank you for joining us. It's really great to see some familiar names. And as an introduction, as Sal mentioned, Joe Galdo, manager with Mercadien's Financial Institutions Group with the focus in BSA. So I would like to just walk through quickly some housekeeping items in terms of how to earn CPE credits. We are offering 1 CPE credit. In order to receive the credit, just want to ensure that you're using your own link as provided to you via email. Make sure to complete 75% of the polling questions that Ashley, our marketing coordinator, will be sending out throughout the presentation. Please respond to these questions within the allotted time. You will not, unfortunately, receive credit if you are using another person's link. If you have only joined the conference call, so make sure to use the link. Also, if you fail to answer 75% of the polling questions, as well as if you fail to remain logged on to the session for the minimum of 50 minutes. As well, viewing recordings of this session will not provide CPE. So now that we have that out of the way, you should be receiving your emailed certificate within 2 weeks of the webinar. And as Sal mentioned, we greatly appreciate any feedback you can provide to help us, again, in this new environment. It is something that we're really doing for the first time, although we are very familiar with Zoom and working remotely, just like everyone else is now, right? So again, any feedback is greatly appreciated. With that said, I will jump into our agenda to get us started because we do have a lot to cover. So I won't spend too much time because we really will get into this throughout the next 50 minutes or so. We'll discuss the purpose and the history of the FFIEC manual. Also, some key takeaways from the April update noted by us during our research. Specifically, we will get into the updates that were included. So really looking at that table of contents and diving into the sections to really go through what has changed or what has been updated or emphasized. Sal will kind of kick us off in the next slide to discuss some program considerations for temporary changes in customer behavior due to the current pandemic. We'll also discuss the potential impact on your examinations, which I know is something that we're all interested in kind of understanding as we move forward. And we'll do our best to keep some time for a Q&A. However, as Sal mentioned, please leave your questions, and one of us will be monitoring and making sure that we hit on as many questions as we can. So with that said, I will turn it back to Sal. Thank you.
All right, so we switched the order a little bit because I have to actually jump off a little early to attend my other conference was supposed to be in Las Vegas, but now is in my office, my home office. So I need to jump off a little early. So I asked the team to bring this this agenda item forward late last night. So one of the things that we have been noticing and seeing throughout all of our clients and within the industry is the fact that we are seeing most of our businesses closed, right? Most of our clients having either who are cash intensive now, not cash intensive because they're doing things, with, as much touchless as they possibly can, or, with less contact as they possibly can. And a lot are not accepting cash, or cash has basically taken a nosedive for their establishment. And one of the things that we noticed is that, starting on the May 1st run, which was only a couple of weeks ago, as the systems went and did some of their alerting with customer behaviors or did the risk scoring, that there was a major drop-off of customers from the high risk list, or there was a major drop of customers from the alerts because they had limited to no activity depending on what type of business they represent. And, questions came up from our team as we were working either in a consulting capacity or in an audit capacity with our clients and, trying to discuss, well, what's the strategy? Like, what are we going to do? Obviously, if this is a short run, is that different than if it's a long run? If this is going to be for the next 6 months to a year that, we're going to be in this type of environment where the profiles are changed, how should we, what should we be doing? We don't have all of we don't have a big playbook here to share with all of you, to say this is everything. What we do is have some thoughts and, some things that we have thought and kicked around internally on, with our clients on the proper approaches. So obviously the first one is you might have a little bit of excess staff now, right? Because your alert volumes plummeted because there is very limited activity or volumes going on in your institution. And if that's happened, this is the time that you can take those individuals and put them on different types of projects. If there's any catch up that needs to be done, if there's any revamping, or if you just want to strategize with the team and try to improve and get better efficiencies in your process, that is the number one way to leverage the staff in the downtime and really try to optimize and look for the best program efficiencies and operational efficiencies that you can do within your organization. The second thing is looking at it from a customer profile perspective. We are in the process of let's say from a Verifin system, right? So there are some of you on the line that leverage Verifin, and in the Verifin system, they alert if your system goes or if your customer's profile decreases, not just if it exceeds the profile that you've set in the custom behaviors, but if it's going to be below, they should be alerting as well to say, hey, is there a change in profile that you need to adjust? So the question becomes, when that question is being posed to your analysts, do you go and now adjust their activity levels to the temporary normal, the new normal, or do you leave them as is and just clear the alerts? So that was really one of the first questions and commentaries. And one of the things that we're suggesting is to leave it as is, not go in and force the system to now take the average cash if they were originally 100,000 and now they're doing 5,000 in cash, not to decrease that threshold or that anticipated activity right away. Make a notation that due to pandemic, due to closure, due to the industry that they're in, the geography that they're in, that it makes sense that it's limited. Now, if as we continue through the pandemic, and now we're closing the month of May next week, if it continues now for a second month, you know, the question then becomes, you know, based on what's happening in the world and what's happening in the United States and in your local geographies, do you now contemplate dropping that profile? And again, you know, it's going to be based on the type of industries and the type of customer that they are, and again, the geography. We're going to get some good insight from Europe and Asia as they're reopening ahead of us. I know some states in the United States have opened, and, you know, we'll get some intelligence there as well. But for those of you on the line in New York, New Jersey, and Connecticut, you know, we are in, and Pennsylvania, we are in a, you know, probably the epicenter still, and we're going to be the last ones in the country to open. So we have the ability now to see what's happening, because if we don't open and everybody else is opening, and then the infection rate spikes again, everybody's going to close and we're never going to reopen, right? So then, to me, in June, we're going to know, as June is closing, more on what our long-term vision is until we have some sort of a remedy or a cure to the coronavirus. So in our opinion, it would now be where you're not resetting your customer's profile until the third month, right? Until the end of June. If you feel the blip is over, or that they'll be coming out, at that point in June and in the beginning of July, you may want to start resetting some of the customer's profile to the new normal, and then letting your systems operate on that new normal. Because on the converse side, if come June, everything starts to reopen, we don't want to have, you know, I'd rather have two months of blips in the radar against profile because of pandemic, right? So you had half of March, but March was, you know, a crazy month, you know, all of April, all of May, and now you'll have, let's call it half of June, hopefully, if everything goes well, in that blip. You know, now if you are doing your review of your customers and you see them having that decline, and they do have a new normal, right? And you're talking to them and they're saying, well, look, based on where we are, based on, you know, changes to our environment, you know, we have a shift. A good shift that I can tell you is from Mercadien. You know, our receivables that we would bill our clients, and some of our clients, or majority of the clients, would cut a check through the AP system and mail that in, and we would get most of our payments through check, and we would put that through our remote deposit capture. And that's how Mercadien's account would look. Now, since the pandemic, we've asked all of our clients, you know, to go into payment through ACH. Now, they did that shift in our profile happened. Most likely that shift in profile will stick, right? Because what will happen now is that profile will now be there after pandemic, right? Or in the new normal, because most institutions that, or, you know, most of our clients are not going to now switch from an ACH transaction back to a check, most likely. So in that instance, we did have a change in profile that you can lock in and start monitoring going forward. So you do need to take all of those into account as you're looking at the behavior of your customers, and, you know, whether it's a temporary change or a permanent change, and making some bets on where that lies. Same thing with the customer risk scoring. You know, do you lock in a low risk rating because they used to be high because they had cash? You know, now if they don't have cash, again, do I downgrade their risk in the system and lock in the lower risk? Again, that follows the same as the behavior of the customer. I would say, you know, come July, we would have to start making some of those determinations, because again, if a cash intensive business is no longer cash intensive because of the new normal that they're going to be set in, I say, why not? You should be able to justify they are no longer cash intensive, and therefore that was the main risk factor. And now you can lock that in as a permanent change to their risk rating after, you know, looking through the last 3 months. So, and then the last component here is, you know, looking at your algorithms, right? So everybody has algorithms and limits and dollar amounts set within their systems to alert. And what we at Mercadien recommend that our clients do is when you're optimizing those rules, you're using customer data to do so. And you're looking at trending of your customer data to adjust those levels. So if the new normal for your bank is that your customers are now all doing 50% less cash, you really need to look at your alert definitions to see if you want to slash. If you were at 50,000 for a business is a threshold you had set within the system, do you now want to move that down to 25,000 because 50,000 is way too high with the way your customer base is behaving? So that is another consideration you really need to do due to the temporary change and possibly new normal for your institution. So that's what I have to discuss here. And again, if you have questions, feel free to put them into the system and I'll do my best to answer them, as they come in, and we'll have Joe and Christina continue with the presentation.
Thank you, Sal. Certainly a lot to think about during the current situation that we all find ourselves living in. And we did think it would be valuable to bring a component into the presentation, notably since the update to the manual, which I believe is covered in an upcoming slide, the update does not specifically reference COVID-19 or coronavirus. So nothing in the update specifically calls out the current pandemic. So again, useful information in the times that we're currently living in for sure. Moving on, getting into the manual itself. At this point, I'll make sure I'm moving quickly because I do want to get to the really the meat of the presentation, which is getting into the updates, but looking at the FFIEC and understanding its purpose to prescribe uniform principles, uniform standards, uniform reporting forms, and just overall to promote that uniformity in the supervision of financial institutions. The manual contains an overview of BSA and AML compliance program requirements, management expectations in terms of risk, best practices, and examination procedures. As you can surmise, council, right? It's a council, so it was a very collaborative effort between federal and state banking agencies, notably FinCEN. Additionally, OFAC also assisted in the development of sections of the manual that do relate to OFAC reviews. As we all know, the last update was in 2014, December 2014 to be exact. So only a mere 5+ years for the next update. As we know, on April 15th, 2020, there was an updated version of certain portions of the examination manual. This update was meant to provide guidelines for assessing the adequacy of an institution's BSA and AML compliance program. Although directed to bank examiners, the manual offers insight to other parties about regulatory expectations for compliance, including how banks will be evaluated in the upcoming examination cycle. So who are these other parties that would be interested in understanding what the examiners are looking for and how they will be testing, right? It's us, banks, credit unions, independent third parties, such as Mercadien. So of course we would be interested in understanding what the examiners are looking at in terms of updates or points of emphasis. The next two slides just go back into the background of BSA. I'm going to quickly breeze through these slides again to get to the updates, looking at the clock and where we currently are. But I think notably 2020 has been a different type of year. But aside from COVID-19, it's also the 50-year anniversary of the Currency and Foreign Transactions Reporting Act, commonly known by us as the BSA Act. We understand what the BSA Act was established for and what its purpose is. It has had a long history of, being bolstered and enhanced. There were a few game changers along the way, notably in the mid-'80s, the Money Laundering Control Act of 1986, which really augmented the BSA's effectiveness by adding different sections, which really enhanced its power. Again, in 1992, another Money Laundering Act was passed, which strengthened the sanctions for BSA violations. In 1996, the SAR was developed to be used by all banking organizations in the US. So again, a pretty big milestone in terms of BSA. In response to 9/11, Congress passed the Patriot Act, arguably, or maybe not arguably, the single most significant AML law that Congress has enacted since the BSA itself in 1970. Among other things, the Patriot Act criminalized the financing of terrorism and augmented the existing BSA framework by really strengthening CIP. Oh, looks like a polling question just popped up. By really strengthening CIP and prohibiting financial institutions from engaging in business with foreign shell banks, requiring due diligence procedures, and in some cases, EDD procedures for foreign correspondent and private banking accounts. It also really improved information sharing between financial institutions and the US government. So with that said, between the introduction and the background, I will turn it over to Christina at this point.
Yep. Thank you, Joe. Good morning, everyone. It's a pleasure to be here with you this morning. I'm Christina Richardson, supervising senior on the team. So we just wanted to provide in this next slide where we can access the FFIEC manual, reference point for you all. Obviously, this website, you can view this manual either online or in a PDF version. It is also available in Spanish. So with that said, the key takeaways we wanted to kind of discuss in the next slide is kind of just our takeaways from, our research and recent ACAMS webinars that we attended to learn really what was the update of the 2020 FFIEC manual, what that entailed. So based on our research, we found that there was a lot of speculation that went into the release of the examination manual being released during this time. The last revision was back in 2014. So why now? Why during our current state of this pandemic? In the recent article that we found, we found that the agencies are aware of this uncertainty and the release of the manual during this unprecedented time. And they basically said that, the manual update tailored the examination work, and it's been in the works for an extended period of time. And it should not be interpreted as new instructions or any new or increased focus. So that's just an interesting takeaway as we go through this presentation, that you're not going to see a lot of major changes to the examination manual. The examination manual doesn't lessen the expectations or the standard or create any new implications for BSA going forward. But it's just interesting to note what changed and what those impacts are. As we go through the presentation, you'll see that the wording was carefully chosen in the layout of the examination manual. So basically, what we're seeing is that the drafters chose their words very carefully and referring to banks needing an adequate program and reasonably designed procedures as opposed to an effective program. So in addition, you're going to see a increased use of the bank's BSA risk assessment and independent audit. So for example, the updated manual directs examiners to leverage off the bank's risk assessment and audit, making it more important for banks that have a strong risk assessment and comprehensive and independent audit process. The updated manual also distinguishes between legal requirements and supervisory expectations. So you'll see a lot of word changes here that the drafters used to use must for legal requirements and should or may for expectations. So the April 2020 updates further state that the board is responsible for ensuring that the BSA compliance officer has the appropriate authority, independence, and access to resources to administer an adequate BSA program based on the risk profile. This change focuses the board's responsibility for ensuring adequate resources for compliance. So with that, the next slide is kind of showing just an overview of the manual of itself. And we included kind of a breakdown of the contents of the table of contents for you, just so you could see the layout and the structure of the update as it pertains to the areas that they wanted to focus in on. So as we go through the presentation, you'll see the scoping and planning section first, and then the BSA, they go into the BSA risk assessment, and then overall assessing the compliance program. And finally, they also went into how they develop conclusions in finalizing the examination. So for the scoping and planning section, the examiners will start to evaluate information readily available to them prior to being on site. The examiners may review financial reports such as call reports to assess the asset size and broker deposits to loan ratios, etc., in order to leverage the bank's financial standings. And also the examiners may also leverage the bank's website to understand and assess products and services that are offered, geographic location of the bank, or perhaps a press release to determine if any new branch openings occurred, new products or services rolled out recently. These items will all be evaluated to fully understand the money laundering and terrorist financing or other illicit financial activity risk profile that the bank may have. So the scoping and planning process also enables examiners to focus their reviews of risk management and compliance with BSA requirements on areas of greatest risk. So with that said, the focus of the risk profile of the bank, the products and service offered, geographic location may be considered in tailoring the scope of the examination towards these risk areas. And then although OFAC is not part of the BSA, the manual was certainly developed in conjunction with OFAC. So therefore the manual does cover OFAC compliance regulatory requirements. One update to note here is in this section that the 2014 manual does reference that the examination manual is intended to assess the effectiveness of the bank's BSA compliance program. However, they changed it this year to be adequate as opposed to effective. So this is like an example of a subtle change to the recent update. So although this wording changed, we don't think that there's any intention of lowering the standards or expectations here. It just may be that the regulators assume that for a program to be adequate, it must be effective. But it should be, we should wait to see whether there's further guidance on the expectations here, but it's a very subtle change. So next slide is regarding the risk-focused BSA AML supervision. The agencies use a risk-focused approach for planning and performing the examination, which was reinforced in the joint statement on the risk-focused approach to BSA AML supervision. The extent of the BSA AML examination is necessary to assess the bank, generally on the bank's risk profile and the quality of risk management, to identify, measure, and monitor and control these risks through reporting, to report the risk of money laundering, terrorist financing, and other illicit financial activity. So therefore, the examiners will assess the adequacy of the bank's compliance program relative to risk profile. And that given that banks vary in size, complexity, and organization structure, each bank will have a unique risk profile, and therefore the scope of the examination may vary by bank. With that, I will turn it over to Joe.
Thanks, Christina. Christina, you made reference to the risk profile of the institution and how the new update is really emphasizing this point, that risk-centered view in terms of, looking at the institution, right? Really honing in on those high-risk areas and emphasizing this point in regard to the extent of the program examination activities. Risk-focused BSA AML supervision, which was the title of the last slide. This is noted as a new section added to the manual through the recent update. And it appears that its aim is to really amplify the need for an examination approach that is risk-based and tailored to each bank's specific risk profile. In addressing the need for banks to have a well-developed risk assessment, the update does acknowledge that a risk assessment is not a specific legal requirement, but it also notes that having one will assist banks and other institutions in identifying, question number 2, will assist banks in identifying money laundering and terrorist financing, as well as other illicit financial activity risks in developing appropriate internal controls. Christina also mentioned on the last slide a subtle change in language, right? Between adequate and effective. Again, these are some of the changes that we really picked up on or that are noted in the updates to the manual. Another subtle language change, which I just mentioned, is the term MLTF, money laundering, terrorist financing, in place of what we were typically used to hearing as BSA and AML risk. So if I say money laundering and terrorist financing another 5 times throughout this program, it actually would not be bad because it's really peppered throughout the updates. So I'll try to shorten it where I can and just say MLTF. But that again was noted as an observation that one of those subtle language changes that is really consistent throughout the updates. Continuing on with that risk focus, also noted in the updates that if the bank has not completed a risk assessment or if it's deemed to not be adequate, the examination team is tasked with developing that risk assessment for the bank. Although, the expectation is that if the examiner is developing the risk assessment, it generally is not going to be as comprehensive as one that would have been developed by you or the bank. Pretty obvious there. No one is going to understand your institution as well as you do. However, it does become, it is placed on the examination team's shoulders if there is not a risk assessment. So, they'll have to develop one. And again, I'm not sure if any of us want the examination team to be developing the bank's risk assessment. So again, that's you're rolling the dice there. But again, just to point that out, that is noted in the update to the manual. Examiners should obtain and evaluate independent testing reports of the bank's compliance program, including any scope and supporting work papers. This independent testing should be conducted by internal audit department, outside auditors, consultants, or other qualified independent parties who are not involved in the function of being, they're not involved in that function that's being tested, or other BSA related functions at the bank that could present a conflict of interest or lack of independence. Additionally, independent testing, those results should be reported directly to a board of directors or a designated board committee. The scope and quality of independent testing may provide examiners with information regarding the bank's specific risks, how these risks are being managed and controlled, and the status of the bank's BSA compliance as a whole. Independent testing reports and the supporting work papers can assist, can and do assist examiners in understanding audit coverage and the quality and quantity of transaction testing that was performed as part of the independent testing. So this knowledge really assists the examiners in risk focusing the examination plan by identifying those areas for greater or lesser review. If the bank's independent testing is deemed adequate, findings from the testing may be leveraged to reduce the examination areas that are covered and the testing necessary to assess the bank's compliance program. How is that determination made, right? So to determine the adequacy of the testing, examiners are instructed to determine whether or not that testing was independent and whether or not it assessed all of the appropriate MLTF risks, those, money laundering, terrorist financing risks, as well as other illicit financial activity risk within the bank's operations. Okay. So that really covers the updates as far as, our research indicated in terms of independent testing. A lot of this material is really coming straight from the manual. Again, it's only a 43 or 44 page update, so it's not a bad read. Some of it obviously can be a little bit dry, but again, some really good information and some good updates in terms of, what we really need to be thinking about and emphasizing through the next examination cycle. Manual also discusses, the BSA reporting available from FinCEN. It discusses FinCEN Query, which is the system used to access all BSA reports available to authorized users. These authorized users consist of regulatory bodies and law enforcement. The update to the manual states that examination planning should include an analysis of BSA reports that the bank has filed, such as SARs, CTRs, CTR exemptions, for a defined period of time, of course. These reports can be exported, downloaded, or obtained directly online through FinCEN Query. Each federal agency has staff authorized to obtain this data from FinCEN Query. When requesting searches, it's recommended that examination teams contact the appropriate party within their own agency in advance of the examination start date to obtain this requested information. So this is where, in many cases, information is being obtained from your own examination team. In the case of a merger or an acquisition, examiners are instructed to obtain SARs, CTRs, and exemptions on the data or of the acquired bank as well. Okay. All right, we're moving right along. Risk-focused testing, a really major theme in the updates and emphasis that are consistently throughout the updates. Examiners, as we know, are performing tests to assess the adequacy of the bank's compliance program relative to its risk profile. This testing is really designed to evaluate your controls, systems, and processes in place for BSA compliance. Just summarizing bullet number 1, the testing performed during examinations should be risk-focused and can take the form of testing specific transactions, really drilling down, or performing analytical reviews. So as we all know, I think there's only a few things that are in life that are certain. You have death, taxes, and examiners performing testing during each examination cycle. We can't help that. Their testing may focus on any of the regulatory requirements that address different areas of the program, but not necessarily every area. Where transaction testing typically involves reviewing specific transactions or files, analytical reviews are on a higher level review without transactions or file details potentially. An example of this could be analyzing reports as opposed to transactions. The update emphasizes, taking into consideration the size and the complexity of each institution. So the manual is not meant to be Bible, but again, it's a guideline. So under the risk-focused testing approach, the size and composition of the sample selected should be commensurate with the profile of the bank or the institution. So while examiners will test different areas, generally testing different areas in successive examinations, it may be appropriate to test the same areas in consecutive examinations based on any prior examination findings, in addition to the bank's current risk assessment. And when determining the testing to be performed, examiners are instructed to consider changes in the business, the strategies, that the geographic location, perhaps there was an M&A that took place, the transaction activity, of course, and different items such as products, services, and customer types, or technology. Any significant changes in any of these areas since the previous examination, may make it necessary to have more extensive testing to determine the adequacy of the program. Okay, moving on to the BSA and AML risk assessment specifically. Again, it is noted that it's not a specific requirement that the risk assessment be performed at any periodic interval period of time. The risk assessment should provide a comprehensive analysis of the MLTF risk. Documenting the risk assessment in writing is noted as a sound practice. Updates to the risk assessment may be needed, as I just mentioned, when there are new products, customer types, so on and so forth. We also discussed that there is no requirement for this. This is in contrast to the 2014 version of the manual, which characterizes the risk assessment as a sound practice, quote unquote, and also to update risk assessments at least every 12 to 18 months. Again, not a requirement, but it was characterized as a sound practice in the 2014 version. What does this really mean? So this could signal that examiners are expecting more frequent updates to risk assessments as new products, services, so on and so forth are introduced and as customer types change. The assessment of risk factors is bank specific. Each institution may determine that some factors should be weighted more heavily than others. Regardless of the bank's approach, a sound practice would be to document the factors considered, including any weighting of those factors. To ensure that programs are to meet the updated requirements, programs, again, it's a very risk-based approach. And while not a specific legal requirement, understanding your own risk profile will obviously help risk management better apply processes to the BSA and AML compliance program to mitigate risk while complying with regulation. The risk assessment really should be provided, in our opinion, to all business lines across the bank. This is also embedded in the updates to the manual. The board of directors, management, and appropriate staff. I think a lot of times sometimes what we see in the market is a lack of communication in some instances where all business lines are not really communicating as well as they should be or could be. So that is a specific item that is mentioned. So obviously always helpful to have all lines of communication open. Okay. All right, I will do my best to move through, as I know Christina still has a few slides she would like to discuss. Big takeaway here, and this will really drive the next 5 slides as we wrap up. The compliance program must provide for the following requirements: internal controls to assure ongoing compliance, independent testing for compliance to be conducted by the bank personnel or by an outside party. The designation of an individual or multiple individuals responsible for coordinating and monitoring day-to-day compliance, aka the BSA compliance officer. Obviously, training for appropriate personnel and risk-based procedures for conducting ongoing CDD and complying with beneficial ownership requirements. So we'll really dive into these 5 pillars over the next few slides. So I will start, albeit out of order, with the BSA compliance officer. So everyone with us today understands what the BSA compliance officer does, obviously. So this slide is not meant to kind of talk about the BSA compliance officer and what its purpose is. However, the BSA compliance officer is mentioned in the updates through the lens of the board of directors. First bullet here is pretty self-explanatory. The bank's board of directors must designate a qualified individual. Pretty straightforward. Secondly, the officer is responsible for coordinating and monitoring day-to-day, right? Additionally, the board of directors is ultimately responsible for the bank's compliance. The board should provide oversight for senior management and the BSA officer in the implementation of the bank's board-approved compliance program. So again, it's a board-approved compliance program, and the board of directors is ultimately responsible for the bank's compliance. So not sure if we have any board members with us today, but you may want to pay attention, especially to this slide. There was really a point of emphasis in the updates on the board's responsibility, just really driving it home. The board is responsible for ensuring that the officer has the appropriate authority, independence, and access to resources. We all might have different thoughts on what those resources might be, but how about an adequate staff with the skills and experience and expertise necessary for the bank's risk level, as well as systems to support, timely identification, monitoring, reporting, and management of the bank's ML risks. All right, the manual, and lastly, the manual indicates that the BSA officer should regularly report the status of ongoing BSA compliance to the board of directors and senior management. Examiners are directed to confirm the presence of these regular updates by the BSA officer as part of the examination. Examiners are also directed to evaluate the adequacy of resources available to the compliance officer and whether or not the role has the appropriate level of independence. In terms of training, training should cover the BSA aspects that are relevant to the bank and its risk profile. The BSA officer should receive periodic training that is relevant and appropriate. The board of directors and senior management is receiving foundational training. While the board may not require the same degree of training, the training should be sufficient to assist in understanding the bank's risk profile and BSA requirements. Examiners, it's interesting, examiners are now specifically directed to determine whether training includes the results of previous findings of any non-compliance with internal policies and regulations. So they will be looking at your training program to kind of see if it ties back to, prior observations and findings to see if that loop has been closed. With that, Christina.
Thank you, Joe. Yes, continuing on with the pillars of BSA, AML internal controls is certainly one of those pillars. And in that update, we saw that the emphasis here is on the board of directors, right? The board of directors, they continue to emphasize the importance of that role in establishing and maintaining an appropriate culture that places a priority of compliance to the organization. And it really entitles, or it really holds senior management accountable to implement those across the organization. The internal controls that the banks internal controls can also include the bank's policies, procedures, and processes to design and mitigate money laundering, ML, and TF risk to achieve compliance with the BSA regulatory requirements. So in the process of this update, the system of internal controls is important for ensuring that there are systems in place in order to maintain compliance over the organization, starting from the branch level to each department of the bank. So their branches will gather info for CTR reporting, filing those referral reports for any suspicious activity noted, and also for CIP gathering purposes. So it's really important that all the policies and procedures are updated to reflect the internal control process, starting from the branch and working through the organization, going into your lending department, and so forth. So the system internal controls, we also noted that includes a level and type, which should be commensurate with the bank's size and complexity and the organizational structure. So the large and more complex banks may implement specific departmental internal controls for BSA compliance. The last pillar, I'm sorry, I have to request control. I'm still getting used to the environment for Zoom. Okay, there we go. Right, so the fifth pillar, the customer due diligence requirements, obviously we all know this one as the fifth pillar of the BSA. It's focused on obtaining a risk-based approach on conducting due diligence requirements and complying with beneficial ownership requirements for legal entity customers. So we did not see particularly a shift in the requirements for this pillar. The focus here is on the subtle word change of risk-based procedures that we really noticed with the 2020 update. The bank's CIP and risk-based CDD and beneficial ownership procedures are included as part of the BSA AML compliance program, and the bank should be demonstrating compliance with BSA record-keeping requirements, such as completing a beneficial ownership form and customer due diligence profile. So again, really subtle changes here. Nothing that lessens or reduces the due diligence and necessary requirements that need to be followed, just subtle changes. So in the next few slides, I'm going to go kind of quickly because I know we want to leave some time for Q&A. But we felt that it was important to include this here as it was part of the update, and it kind of discusses the examiner's process for how they develop conclusions and how they finalize the exam. So these points here are obviously they gather the information, they assess the compliance and adequacy of the bank's compliance program, and they have to keep in mind that there should be flexibility in the design of that program based on the risk profile of the bank and the risk size of the bank. So it's really important that the examiners keep this in mind. A subtle focus that we saw here is that there was a constant use of the word should. Examiners should do these practices, and I guess in some way that forms the expectation of the examination conclusion. So obviously, the significant findings will be presented in a written format included in the overall report of examinations. And then they also developed they broke down the difference between isolated and technical versus systemic or repeat violations. So they kind of developed a system where they recognize that there may be technical violations involved with the examination, but it is either communicated formally or informally to bank management in conveying these results. Obviously, the more significant severity of the issue will be reportable. However, the bank's corrective action will be noted in the overall response when management provides the response to the examiners of the conclusion. So just a few takeaways here, that there's no change here. It's just more of a subtle change in words and the expectations of examiners as they wrap up conclusion of the report of examination. So the next point that we wanted to go over is kind of understanding the potential impact on examinations. What we're thinking that the examiners may do in the 2020 update, obviously there will be possibly a more focus on the policy procedures and internal controls to make sure that they're aligned to the subtle changes that were made in the FFIEC manual. There may be also an increase of the bank's risk assessment and use to ensure that the bank is capturing all those risk factors that are applicable to the organization. And obviously paying more close attention to the comprehensiveness of the independent audit testing process. Did the independent audit process capture all the high-risk areas of the bank? And was it fully documented and supported what the controls are? And were any weaknesses brought to light? The board and senior management should also have sufficient resources, including staffing and technology. So with the changes that we're seeing, there's more focus on board of director reliance and making sure that that's implemented through senior management. And really focusing on the sufficient resources over the organization, including staffing and technology, to ensure that the management has the ability to monitor, detect, report any suspicious activities. So with that said, I know we're running a little over at this point, so I apologize for my brevity in the last few slides.
Yeah, thank you, Christina. And I did note that there is an open question from Nemo in the chat, so I will, we'll address that question in the chat. Or if there are no other questions, I did want to just mention, I just wanted to say thank you on behalf of Mercadien, myself, Christina, Sal, and Ashley. We really appreciate your time. This is a great group, and we're so happy to be able to come together, albeit remotely. We had a great turnout today. We really look forward to the next one, and possibly seeing one day down the line being able to do this live. But in the meantime, we adapt and we change and we keep moving forward. But just wanted to say thank you, and I appreciate all of the support. I guess we can address the question, since it is the only question out there. Nemo mentioned, what are some of the requirements that a bank must have if some of its BSA AML processes for customer accounts or portfolios are performed by a third party? I'll defer to Christina for any comments, but my thoughts on that is specific to the AML, the updates to the manual. There was nothing that I noted as specifically calling out, if it's being performed by the third party. However, my suggestion, my advice is to just ensure that whichever third party you're working with, that agreeing, approving, and just understanding their process and whether or not they're in compliance with all the regulation. Again, just really kind of sticking to that common sense approach. Nothing that really would specifically change as a result of the April updates. So to answer your question, I think it's just business as usual. Nino, sorry, I think I said Nemo. So how we would typically approach this pre-April 2020 has really been unchanged as a result of the updates. So hopefully that answered your question. And once again, thank you to everybody. Please sending out a copy of the slides as well as a recording of this live presentation to all attendees.
Yeah, Joe.
Yeah, Joe, there's one question in the Q&A from Frank.
Okay.
Would you mind answering that, or Christina?
Yeah, I could take that one, Joe. Is there a risk that Verafin could automatically lower the risk profile of a customer, or is a manual action always required to do so? That's a great question, Frank. And I think Sal alluded to that in the beginning of the presentation. I think that there are some thresholds that can be managed within Verafin. We're very familiar with Verafin, and we understand that there's a lot of rule-based technology that they utilize to customize profile behaviors. So I believe that may, there's behavior models that they use, and they also have rule-based scenarios. So I would imagine that if you're modifying a behavior, you can tweak a custom profile to that customer to lower the risk profile. However, it may also be a situation where you may have to contact Verafin, depending on the setting that you would like to adjust for the risk profile. But I believe there is a custom profile tool that you can utilize to tweak the customer thresholds. I hope that answers your question.
Any other questions? I don't think so. Okay. That's it. Again, thank you all once again. Thanks for hanging with us as we went a little bit over the time, and have a great day and an amazing holiday. Hope to see you all soon.
Thank you, everyone.